Let's go live to Ticky Fullerton. An update on the market. It's not quite the testosterone in the market today as yesterday.
Indeed, of course, we got back into bull territory yesterday, Kieran, and no, we've run out of puff at the moment. We're down now 0.39%. A bull market, of course, is when you go up by 20%. Can you believe we've done that since March 23? But no, we fell back slightly today. Energy stocks dragged us down, a bit of mining as well. But we also had Westpac's consumer confidence numbers, which were just as awful as NAB's business confidence numbers yesterday, which the market took no notice of at all. Now, these confidence numbers, you can see, look, they've fallen off a cliff there. They're the lowest monthly decline since the 1990s. And Westpac Chief Economist Bill Evans pointing out how quickly that has happened, unlike the last couple of collapses. And interestingly, one of the sentiment questions that are asked in this survey is time to buy a dwelling. Now, that was down 31%. So that gives you a little bit of insight into the property market at the moment. I mean, it's really difficult, Kieran, frankly, I think, to hang on to the positive side of things at the moment. Well, the IMF have come out, as you know, talking about this very steep V. Whether it really will be that steep V, we've got the Australia's labour force numbers coming out tomorrow for March. But just how we're going to get through this is the perennial question, and indeed our exit strategy to actually crank up the economy. So I think it's right that the market's checked itself at the moment. The other thing is we've got the earnings season for the quarter coming out in the US right now. A couple of really bad results from Wells Fargo, one of them I know, and really the market was up there 3%, notwithstanding we're going to have a really bad corporate season. So a bit confusing again.
Yeah, and Ticky, some joy for the gold bugs out there.
Well, indeed. Look, we're now sitting, gold is now sitting at, I think, $17.25 US an ounce. Just look at that graph, will you, for the last 6 months. I think it's up 23%. We've got Credit Suisse analysts saying it's going to go to $2,000 US an ounce. And look, a lot of this is due to the huge stimulus that's being thrown at the coronavirus around the world, and therefore the enormous debts which analysts see as leading to a prolonged period of negative interest rates, and that of course makes it a lot easier to hold gold. We've also got governments that are likely to want to hold more gold. Everyone wants gold, so if you're a gold bug and you've been sitting on gold, you're doing rather well.